are your thoughts on last week's performance? I mean, one thing I saw was banking sector profit taking and some sectors bearish, so we're not seeing that, upbeat trend that we've been seeing in the past couple of weeks.
Yeah, the market has kind of rallied like hard since the beginning of October. Spilling over from third quarter, we saw the market do above 20%, and I think right now we've seen gains across many of the sectors in the market. It's just right for people to come in to take profit, and of course, aside that, we've seen a couple of results coming to the market year on year. If I talk about the banking sector specifically, year on year the results have been good, but if you check maybe quarter on quarter for the banks especially, we've seen a kind of slowdown from the kind of ramp up we saw between Q1 and Q2. So looking critically at the numbers for a couple of investors, I think they might have a rethink about maybe piling up into these stocks or maybe slowing down at this stage. So I think we've seen mixed reaction by investors in the market. One side profit taking by speculators, and other side people just taking it slow because of the quarter-on-quarter performance we've seen by the banks especially.
That's right, and I mean Axis Bank released their Q3 results on Friday. Quarter-on-quarter they did okay. Year-on-year not so good. People say, quarter-on-quarter they didn't do well, but year-on-year they look good. But many people say it was just because of the fact that they've acquired Intercontinental and that looked good on their books. I mean, what was your take on their numbers?
Yeah, I think you're very spot on. I mean, year on year, if I look at the key line items on the income statement, it's very attractive. I mean, you see from the gross earnings growing about 88% to the bottom line growing about 161%. Of course, there was also a surge in the operating expense, but that's a given, given the fact that they acquired Intercontinental Bank, and we saw a very sharp decline in their loan loss provision and impairment charges, just close to $1 billion, less than $1 billion compared to like 12 billion we saw this time last year. But quarter on quarter, I think it's not just specific to Access Bank. Across the banks that are released so far, excluding maybe Diamond Bank, but I think for UBA, for GT, it's the same story. We've seen that slowdown in the third quarter in their income, in the top income earners or income lines on the statement. But even if you look at the balance sheet, in terms of the key earning assets for Access Bank now, we saw just about a percent growth in their loan book, while investment securities even dipped about 38%. So I'm not really surprised why we saw the slowdown in their interest income for the quarter. But surprisingly for me is the fact that the interest expense shot up quarter on quarter by about, I think, 19%. If you look at the deposit level at the end of the quarter, it dipped by about, I think, 20% or there. I'm not too sure what the number is, but it fell from the previous quarter. So, but maybe we've not really added more details. It's just the numbers we're seeing. But my guess is that probably the hike in the CRR at the beginning of the quarter could have impacted probably their deposit levels, and maybe they have had to go out there to get more expensive term deposits to shore up their deposits. So all in all, I think, like I said, people will be much more critical at this stage, looking at what's happened quarter on quarter. And going forward, we would have to keep our fingers crossed to see what happens in the fourth quarter. Hopefully, we'll get more guidance as to what really happened from the bank when we talk to them, when they address the analysts based on for this result that was just recently released.
And what's your thought on their stock performance? I mean, I'm surprised. Gained only 30 kobo. Some people say delayed reaction. 1 month performance, looking at that stock, down 1%. What is your take on Access Bank performance, its stock specifically?
Yeah, I think, amongst the top tier banks at this stage, I would say Access still has the most upside based on our valuations. I think it's still trading way below its fair price to book value. So I think market is yet to really fully price in the potential that we might see at the end of the year. That's 2012 full year into the stock of Access Bank. I think if people are thinking of going into stocks within the banking space, the top tier banks, Access will be the top pick. Of course, we have much more interesting picks probably in the mid-tier space, likes of Sky and probably Diamond Bank. But I think at this level, I think the price is fairly discounted for me for Access Bank.
Well, what's your outlook going into this week? Certainly, when it comes to results, Q3 results being released, we hear Zenith Bank is possibly coming out today. What's your expectation there?
I think the tone has been set already by the results we've seen so far.
Quarter on quarter.
Quarter on quarter. So I think people would probably expect to see the same trend for Zenith and probably a First Bank when they release. Anything outside of this would be a positive surprise, and we could see probably a ramp up in the price of Zenith and First Bank when they release, if they don't follow the trend. But like I said, GT is, we saw the same trend in GT, now Access, UBA almost the same thing, slightly different anyways, but almost the same trend also in UBA. So any of the other banks that release and it's kind of different from the trend that's been established so far would kind of go well for the stocks of these two banks when they release their results.
So going into the week overall, what do you expect? Profit taking continues? Do you expect it to peak? You know, the market slightly more upbeat, or continued more speculative trading? What's your take?
I think we would see more volatility. That's obvious anyways. But in terms of how we would end the week, I think we would probably end maybe slightly negative, because if I look at the numbers and if I look at probably the kind of returns that we've even accumulated in the last 2-3 weeks since we began the fourth quarter of the year, I think people might just want to like take some money off the table. And of course, heading into the fourth quarter, the final quarter, might just want to like take a play, get out now and get in probably much later towards the end of the year, where typically prices would be a bit lower, and people start taking a position for dividends going forward into the full year.
Well, let's quickly check in on the fixed income market. I mean, you're saying you'll see we're going to see a resurgence in yields. I mean, I felt like over in the bond market's a slight lull. What's your take for this week?
I think before the auction last week, we saw yields pick up. And I would say that would be as a result of people who got in pre-October 1. That's before the inclusion of the bonds in the JP Morgan Emerging Market Index. And of course, from what I hear, the 1.5 billion, estimated 1.5 billion is yet to really come into the economy. I mean, what we saw from the JP Morgan report, you know, stuff like that. So a lot of people got into the market hoping that they would take advantage of the rally, of an impending rally, a kind of getting out, or they got out of the market at that point, you know, piling pressure on yields and, you know, slowing down prices. But at the auction, given the inflation announcement last week and the kind of demand we saw at the auction, I think sentiments are turning positive again. And last week, for instance, we saw yields moderate about 40 basis points across the underrun bonds. So I think going forward, yields continue to be at around these levels, maybe at about 13% levels. I think we're at about 13.5% across the underrun bonds, at about 13%. But eventually, if we see the volume of inflows we're expecting from offshore inflows we're expecting, then we might probably see a further moderation to about 12.5% on yields on the underrun bonds.